Yeah, let's go. I'ma make a couple stacks, do exactly what I want to. Mix a couple tracks, get a lady that I'm drawn to. Turn up to the max, get me faded till I'm gone, dude. I do what I want, couldn't stop me if you wanted to. I just work hard, yeah, harder than the rest. Some people say I'm lucky, others saying that I'm blessed. But I keep my head down, cause I crave progress. You ain't never gonna stop me, cause it's my conquest. And I'm never gonna rest, yeah. And y'all don't know that I'm a soldier. I always felt like I'm alone, yeah. When everybody thinks they know, yeah. And y'all don't even know I own, yeah. And now I'm ready taking over, cause every day I'm getting closer. Just look at everything I'll show ya. And now I'm ready, I'ma blow up. When I throw up, and if you cross me, it was good to know ya. I'm impatient, I don't ever slow up. I stay young, no, I never grow up. I keep working to the point I throw up, and if you cross me, it was good to know ya. Yeah, oh yeah, yeah. I'm not the type to take no for an answer. I don't deal with people that are like a cancer. No, instead I hang with the people that enhance ya. And I'm not the type to give out second chances. I just wanna work on my own for myself. I don't need no help, not anybody else. Nah, man, I got it dealt. I'm working on my wealth and I'm working on my health. Keep on working to excel, cause I'm working on myself, yeah. And y'all don't know that I'm a soldier. I always felt like I'm alone, yeah. When everybody thinks they know, yeah. And y'all don't even know I own, yeah. And now I'm ready taking over, cause every day I'm getting closer. Just look at everything I'll show ya. And now I'm ready, I'ma blow up. Yeah. As long as I'm conscious, I'll be working hard to get there. I am not a novice, I'm gonna be the best, so prepare. Cause you know I'm honest and I'm coming for you, be scared. Man, I promise that I'm gonna make it somewhere. As long as I'm conscious, I'll be working hard to get there. I am not a novice, I'm gonna be the best, so prepare. Cause you know I'm honest and I'm coming for you, be scared. Y'all already know.
Good morning, good morning. Mic check, mic check. How's it going, guys? We'll break this down in 3 more minutes.
Yeah, it's our time to shine. Show that's the kind of state of mind you gotta combine with hard work and time. You gotta climb to the top. Don't let yourself drop till your heart stops. Let this beat rock. Got a new clock and a new stock for this new rock. Just let your mind loose from the new stock. Drunk off the goose, thinking that I'm too pop. Getting caught with a few thoughts cause I'm too lost. Off the speakers can't even handle me. Give it what I got, nobody's gonna drain my energy. And I will never stop, I'm motivated by enemies. Setting up shop so everybody remember me. And no, I am not going through life regretfully. I'd rather work non-stop, what they call incessantly, than work some odd job just to live life pleasantly. Already got lost in my mind, not a fantasy. I'm getting there. Forgotten souls, so stop, drop, and roll. You lost all control and pop off your ball. I got squat, I fold, I'm not bought, I'm sold. My stock rocks, it's gold. Hey, knock, knock, she holding shit, talk to close. I ain't stopping though, it's hip hop, you know. Or is it rock and roll? I'm not dropping down, no, my pocket's grown. You can't stop the show, so get rockin' on. So let me break it all down for you. I ain't never giving up, I ain't never giving up. Taking that crown from you. I ain't worried about you, I ain't never. So let me break it all down for you. I ain't never giving up, I ain't never giving up. I'm taking that crown from you. I ain't worried about you, I ain't here to make friends. Yeah. I ain't never slowing down, keep on going till I'm down. No, I'm never slowing down, cause we're blowing up now. I ain't never slowing down, keep on going till I'm down. No, I'm never slowing down, cause we're blowing up. Hard words like a weapon, attack with no questions. In my own section, and they still disconnected, cause their mind's been infected, and they're filled with objection. Too filled for recollection, so we're losing all attention. They don't know I'm in contention, cause I'm gaining their attention, cause I'm making a connection. Lyricism and aggression got me feeling my ascension. In my passion, my profession, I'm attacking my obsession, taking action and progressing. I go off on the enemy, that's what makes them scared of me. Make my plans carefully, then execute them daringly. They say I act recklessly, but that's why I'm effective. See, you can't predict my tendencies, I offer no transparency. Some people think I'm lost, others think I'll be a legend. I'm never gonna stop till I'm one above second. And my thoughts at the top, but my mind stay present. Don't let your dreams stop, cause dreaming is a blessing. They tell me all the same, told me I won't make a name. But it's not about the fame, it's about keeping me sane. So I stay within my lane, feel my blood pump through my veins. Feel adrenaline, no pain, welcome all to my domain. Yeah. So let me break it all down for you. I ain't never giving up, I ain't never giving up. I'm taking that crown from you. I ain't worried about you, I ain't never. So let me break it all down for you. I ain't never giving up, I ain't never giving up. I'm taking that crown from you. I ain't worried about you, I ain't never. So let me break it all down for you. I ain't never giving up, I ain't never giving up. I'm taking that crown from you. I ain't worried about you. So let me break it all.
Let's go ahead and break this down. Let's start with where we were last week and go from there. So let's find our Tuesday. Here we go. This is last Tuesday. We're here Tuesday 1 p.m. EST again, just like every week. So let's see what we were looking for. Last week, I'm going to delete all this stuff here before we break everything down. So let's check this out. I'm going to pull a fib on our range. This time I'm going to include the new high, and we're going to look at 3 points of interest. $111,000 Bitcoin. That is fair value. So anything below that in this range is a buying opportunity. So that's where we are going to look for longs below this range. But I'm not trading this week. Why is that? This is the first week of the month, so I'm going to bring you over here to Forex Factory, and we're going to look at this for a second. We have three very important things to note that are going to tie into one of the most important aspects of trading, and that is doing nothing. Because if you want to be a profitable trader, you have to recognize when it is favorable and you are likely to have a higher hit rate in your trades and when you are likely to lose. And if you can forecast very specific times of day, days of the week, and weeks of the month, and even months of the year in which you are less likely to win, and you can sit on your hands when the market is the most annoying. So let's highlight 3 things that make this week, for me, a non-trading week. So first thing, it's the first week of the month. I said in the last stream that the middle 2 weeks of the month are when all the action happens, and the first week and the last week are lower probability. So it's the first week of the month. That's a good reason to sit on your hands. A second reason, we have a banking holiday in the beginning of the week. This throws off the week. It throws off everyone's schedules, and it just makes it more of like a choppy kind of seek and destroy week. Secondly, the first week of every month, you can see this on forexfactory.com. This is where you could see that Jerome Powell was going to speak before he spoke. This is where all the high impact news drivers are. So all these red folders are news drivers that are pre-planned for release before they hit the market. And you can see which ones are going to be high impact and what time in New York time they're going to be released. So this week is a non-farm unemployment change week. Typically, when we have the first week of the month, it's always non-farm employment change. When we have that, the first 4 days of the week are going to be generating liquidity. So they're generating people betting on higher and lower prices before this high impact news driver. And then typically you can see that 8:30 on the dot, it railroads one or both sides of the market. So think of it like time dilation. It does a whole like this right here. Okay. So this is a whole lot of doing nothing. It's building a bull flag. And then you've got people over here that are going to be betting on the market going up. Let me turn this magnet off for a second. Okay. So you have people right here. They're bullish because everyone and their mom's cat can see that this is a bull flag. They're going to start making bets or trades or positions in the market. They're going to put their stop below the flag and they're going to set their 3-to-1 R right here. And look what happens. Look at this wick. It generates liquidity, so this is time dilation. It's boring everyone out. It's collecting orders on either side of the market. Then bang, it stops out the bull flag because it's obvious, and everyone's stop losses are right here. And then it comes back in, and you're like, oh, well, dang, if we don't count the wicks, let's redraw that bull flag, and let's try again. So now we're going to re-enter again. We're going to put our stop below the wick, and we're going to target a 3-to-1 R, and bang, then it wrecks everyone. So what is it doing here? It's going to a discount in this range, right here, into this little pocket. Bang, right there. I'm going to highlight that blue for buy because we buy it in the discount, and all I did was measure the discount of this impulse. There's your buying opportunity. Here is your target. And bang, we go out and we make new highs. And that's where you pay yourself. You pay yourself at highs, and then you move your stop loss to even if you want to protect your money. That way, you can have a portion of it where you get paid and a portion ready if that ran straight to 150K. That way you're positioned for all scenarios. But you move your stop loss to even. That way, if it reverses, like we called last week, right here, and it takes out the lows and shifts market structure, then you're also protected so that you don't lose money. All right, so now let's look at what happened here. We took these lows, we had a shift in trend, a shift in market structure, and then we retraced back into this impulse right here. Now, where did we retrace and how did we know it was going lower before it went lower? Two things. We talked about how when you shift trend and you go from an uptrend to a downtrend, your up close candles or your green candles are going to act as resistance. And then this, we highlighted a fair value gap last week. This, the daily candle, so it's a daily fair value gap, so we're looking at daily candles. These daily candles closed below the midway point, and then we went lower. And look at this wick. It went violently for the lows, and then kept going lower. Now, I highlighted this on Saturday. I made a post right here on how these equal lows are bait. It's bait. It's a double bottom. It's a textbook pattern. Retail is all gonna be playing and longing this. And now, what's happening? their confirmation bias is getting tickled. So they're like, oh, heck yeah, I bought the double bottom and it's working. So what am I looking for now? And why did I say on Saturday that I was looking for us to pump into Labor Day and then make lows by the second week in September? Mainly, September is historically bearish for Bitcoin. In the context of what's happening here, we're in a premium, meaning before the start of September, right here at the end of August, we're in a premium market in this range, so it makes sense narrative-wise for us to make lows into September. We can go lower without breaking this low and still maintain bullishness for the latter half of the year. I'm still expecting lower prices for September. Now, what specific things do I want to see in order to confirm that? Two things. We're making a downtrend, so now I'm going to highlight all of our points of interest and our fair value gaps. So there's one daily fair value gap I'm going to highlight, and here's another highlight. Okay, and then I would draw a red line from this candlestick, but it also happens to be exactly fair value. So just a little bit of confirmation that maybe the Bitcoin price isn't random and it's algorithmically controlled. But we'll talk about that later. So if I want to see lower prices, and if I were trading, which I'm not, I would want to see no candles closing above here for this week. So I'm looking for two things. I'm looking for the first, either Monday or Tuesday, to make the high of the week and then revert lower. Now it did tag this low, but barely. Let's look up here at this low price right here. We're going to see what that says. It says 107,286.25. What does this one say? 107, 335. So it made lower prices by like what, 50 bucks? That's still technically a double bottom in my eyes. It's too smooth. So retail's going to have their stop losses below here. We're at fair value, which means if you are going to take a long or a short, it's kind of just 50-50 if it's going to play out. So this is a low probability area to play any range on any chart ever. So this is a great time to practice not pushing buttons and sit on your hands and wait for higher probability plays. So let's say you play the cup and handle on the 4-hour chart. Let's go to the 4-hour. So I see one thing here. I see a little, like a cup, and then, kind of a handle, but it's gross. It's very wicky. It's very dangerous. We have really sharp wicks. Um, so it's low probability. And if you want to play high probability setups, we're going to want to wait for prices down in here in that 80% discount Black Friday area. So let's look at this. If this candle closes below this midway point, then that will confirm lower prices, and then I'll really start paying attention second week of September and get more data, more information on the table in order to have a more informed play. But let's go back to the title of this episode. I titled this "There Are No Rules." So why did I title it, make it that title? For anyone who comes in to trading, and if you actually want to be a trader and you want to be unemployable and you don't want to answer to anybody and you want to be able to take your monthly bills out of the market in 20 minutes and then live your life, you're probably attracted to that cowboy-esque um, lifestyle that trading advertises. That no rules, I do what I want when I want mentality, that lifestyle, that everything that trading enables after you're successful. So when you go into these markets, you realize two things. There are no rules. There's nobody telling you not to do it, and there's nobody telling you to click the button. There's nobody telling you what strategy to use. There's nobody telling you what day to trade, what time to trade. There are no rules. It's complete wild, wild west. You can do anything at any time, whenever you want. And then that's when you start learning. So the caveat, the way that trading is backwards in every way is that in order to be successful, you have to do the exact opposite of what drew you to trading in the first place. And that is you have to build rules for yourself around your specific trading plan, your specific model or pattern, a specific time of day, a specific week of the month, and specific months of the year. You have to actually do the opposite of what drew you to this career. It's a profession. You have to do the opposite of what drew you here in the first place. And that is you have to study it until you know your way around the charts. And then once you can start reading these candles like a book, and you're not surprised by anything, and you've hit the point where you're not in here for the rush or for the dopamine or for the quick wins or oh I'm gonna retire and everything in one trade. You have to get bored and then put rules around yourself so that you treat this like a business and not just cowboy willy-nilly. Oh, it's 8 p.m. on a Sunday, so I'm gonna enter a trade because I feel like it. Like that's not how the market works. The market works on a time-based schedule with very specific prices and very specific high probability and low probability conditions. So in order to be successful in a business without rules, you have to make your own rules. So what might that look like? That is different for absolutely everyone. And that is where the emotional intelligence and the emotional awareness comes into play. That is the 90% of the unseen work that's more than just, oh, here's my cup and handle, I'm going to play it. Right? I could go and have a stretch and say, oh, well, I see a cup here and I see a handle here and I'm going to play that. Why didn't I play this? Why didn't I buy this cup and handle if I say the cup and handle's my pattern? I didn't play this because of this range and this red line. Everything above here is a premium. It's too expensive to buy. So I don't play just any cup and handle or just any bull flag or just any inverted head and shoulders. You have to combine that with additional rule sets, additional conditions before you click the button and put your money on the table, right? So an example of that looks like I only play cup and handles in a discount. Okay, so let's look at the discount. Let's be even more specific. I only play cup and handles in a discount that is below the 70% range retracement. So, oh, okay. So that means I'm allowed to play my cup and handle, but I'm only allowed to play it when it's in this zone. And then, technically, that will still be a big old lopsided elliptical cup and handle, right? And now I'm projecting this out, I'm drawing it out, and look where my cursor just went. The 14th of September, the second week in September. So I'm going to add even more conditions, even more rules before I take a trade. I'm going to say, okay, I'm only going to play cup and handles. I'm only going to play them when they're in a discount. More specifically, I want super, super discount prices. So not just below the 0.5, but below the 0.7. And I'm only going to trade in the middle 2 weeks of the month. So this is my very specific range that I'm going to be looking for a time-based opportunity. right? So if we go here and in the next week of September, and we just absolutely dip and we break this low down here at 98.3 and we go into this higher time frame gap on the monthly and we completely disregard this daily time frame gap, then since I'm looking at this very specific time, I'm going to redefine my plan. I'm like, okay, if that doesn't work and I don't find a discount in this range, then I'm going to expand it down here. Okay, close that. All right. It's like, okay, so if that doesn't work and this range gets broken, then I'm going to look for an even deeper discount. So it's very, very, very important to know what your conditions for entering a trade are. You can't just go and buy Bitcoin because Michael Saylor just bought 444 million, thousand. It doesn't even matter. Like, it doesn't even matter what these other people are doing because what matters are your specific rules and your specific conditions for when you're going to put your money at risk on the table for the smartest money in the world to take from you. So, as you can kind of see, this is this is all the stuff that you have to manage when you're doing what 90% of trading is, which is doing nothing. If you want to make a 10 days wage in one day, that means 9 days you're going to be doing nothing. And you have to come up with a lifestyle, a routine, a set of hobbies and activities that occupy your mind and your body in a healthy way so that you're not sitting here looking for cheap dopamine that comes from over leveraging your account and pressing buttons when you shouldn't be pressing buttons. And that right there is what separates traders from the winning traders from the losing traders. And that's why the profession, the career of trading itself, has so much upside because 90% of people lose. So if you can do what 90% of people can't do, that's when you'll win. And 90% of people can't sit on their hands and do nothing and manage their emotions. That's what will make you an outlier. That's what will make you leaps and bounds ahead of the crowd, is knowing when it is low probability and you and your edge is gone. Right? It's all about finding an edge and a model that's catered to your psyche and to your budget. But once your model is low probability or your edge is not present in the market, it doesn't matter how good your edge is. If you have a 99% win rate and then on one day you get bored and you're like, well, crap, I got to make this bill somehow. So I'm going to go click the buttons when I know I shouldn't be or my model isn't present. And if you break your rules, you're toast. That's where your win rate dies. That's where your profits get like, let's say you work really hard, really disciplined for 2 weeks in the month, and then you have one day where you shouldn't be pressing buttons, and then you take a loss, and you're like, oh crap, well, I know I can just do this, I'll just trade again. And then you lose again, then you lose again, and then you get to the point where you've lost a week's or a month's worth of gains in one day because you acted emotionally, you pushed the buttons when you shouldn't have, you didn't follow your rules, and your whole edge is gone and your whole months of gains are gone. That's that's the edge. You are the edge. Right? You are the model. You are the setup. And that's the cornerstone to all of this. So I'm not other than saying Bitcoin is in a premium right now and I'm not pressing the buy button. That's that's it. I'm looking for lower prices and I'm going to wait and enjoy my life and exercise and meditate and study and build uh, different projects, different endeavors, and I'm not even going to pay attention to the charts for this whole week because none of this price action matters until we get to a very specific time window that I'll be looking to take plays, right? So that's really the gist of what we're going over here today is we're in an established downtrend. We're making this obvious bull flag. Everyone's going to be drawing that pattern I just drew. Everyone's going to see that Michael Saylor's buying again. If if you buy when he buys, good luck. And it's probably not going to end very well. So let's zoom out. I'm going to delete this here, and we're going to look at something else. Okay, we have our daily points of interest. So let's talk about laddering and layering time and different time frames. So you can see here, I have a weekly point of interest denoted right here. I have a monthly point of interest, and then I have daily points of interest. So I'm going from a high time frame to get a bias. Let's delete this too. Actually, let's just expand it. I'm going to click this magnet because I want precision and not moving averages. Okay, so this is this monthly impulse. We had 4 green months, 1 sideways in August, and now look what happened in September. We're going up first. So we could go up and close above right here, 15.7, 115.7, and we could continue the bull run, no problem. Or we could be making a wick just to dump lower and get a more discounted buying opportunity inside of this range. Either way, it remains to be seen. So see this, we're on the monthly. So let's zoom in. I have this monthly gap drawn right here from this wick to this wick. So April and June do not overlap. So that means there's an inefficient price delivery. That means there was selling offered here, and then we went ripped straight up through, and then we offered buys to here, but not in this range. So that means there's still orders on the table in this range from 98,300 to 95,800. That's our monthly fair value gap. That means if we retrace into that and then we still close above this midpoint on a monthly basis, this is a fair value to be entering the market for a continuation play. See the last time we had a fair value gap here on the monthly time frame? This was in August, again, August 2024. Last year, we had a down close, a red August. We have a red August. And then what happened in September? September was actually green, but we still opened up and we went down first. So let's go into the weekly. Let's see what that looks like. There's August, bang, bang, bang. So here we go. Here's the first week of September. It goes up, or it opens, goes up, makes a wick, then it goes down, then it closes. So we can see in the first week of September we didn't make new lows. Then the second week of September, we engulf that first week and we close bullishly. So that means that this entire wick of this bearish candle is a buying opportunity. So let's zoom into the daily and see what's happening here. So I highlighted the wick of the weekly on the first week of September. Right, so we opened, we went down, we chopped around, we took stop losses below this candle without a wick. We're also right at the midpoint on the monthly. That's what this yellowish gap is. And then we came up here. So what is happening here on the daily chart that would give us reason to believe we're going higher? Bang. That is a swing high created on the inside of the first week of September that gets taken out. And then we flip. What did we flip? We broke market structure on the daily time frame after respecting a monthly point of interest. And then we go here. Remember, when we're in an uptrend, down close candles will act as support for down close candles. And that's exactly what happened here. And then we got another candle that closed above one, two previous down close candles. And then what did it do? It used the previous down close candles that we just flipped as support. Just like this one, it closed above this down close candle. This one immediately went down. And to make a bullish candle, we went down first, used a daily point of support, and took out the highs. So there's an intraday play just inside this daily candle based off of this structure. All right, let's zoom back to the weekly. All right, I'll keep it on the daily here. So we had one market structure shift. I'm doing Alt T on Windows, and then I'm holding Shift to draw horizontal lines. So if I do Alt T, that's a trend line, and I can draw it wherever. But as soon as I hold Shift, it goes horizontal. So that's what I'm doing on my keyboard. But anyways, we had a low right here. This low was not broken, so we're holding uptrend. We broke the highs, and then we came down and did what? We went straight to this previous point of support on the daily time frame while also retesting this monthly fair value gap. Remember? That's what this is. I'm layering my time frames. We bounced here. We made another impulse where this is another daily fair value gap. We used the top half of it as a springboard, and that was the ideal entry for the run all the way up to 108,000. Using scaling from the daily to the weekly to the monthly, all right in here. And that's your run up from the beginning of October to, look at that, that's the second week in December. So look right here, 13, 14, right? So the second week in October to the second week, the end of the second week in December. That is the part, the time first. That is the time that you want to be in the markets. That's the time that you want to be riding this thing up. Okay, you don't want to be like, so this is 62,600. You could buy 62,600 here in April, and then you could get chopped around, you can get bored to death, you can need your funds for something else to pay bills, or you could have your stop loss too tight and then you get stopped out, right? Or you get your stop loss below here, then you get stopped out. You want to wait for the time. So this would be months of the year specifically. We're waiting for September to complete. Bang, here's October. What happens first week of October? We go down first. We make the wick of the monthly. And then here's the second week. And it's a fun time straight into December. This is what I'm looking for where we are now. Okay, but we're here. We're in the first week of September. So I'm going to sit this out. I'm fully expecting something like this. And I'm going to wait 2 weeks for a daily setup that's going to expand into the weekly. Let's go to the weekly. Look at this. So I'm gonna delete these just to make it clearer what we're looking at. So a daily setup that becomes a fractal and expands into a weekly setup And then I'm going to wait for September to pass. So we look in the first week of October to make up the low of the month, right? So here's, once again, we've got a low, a higher low. The highs are broken. There's our market structure shift, aka the cup and handle combined with time. And we're going from a fractal from the daily to the weekly to the monthly. Then this is your high probability setup after everyone who played this bull flag got stopped out. And we're bullish on a closing basis in here's September. The closing basis of these monthly candles is above this midpoint. We wicked down here and it was evil. And it took a bunch of people's liquidity that were likely on sides and right, but they were too greedy with their stop losses. So this is why when you play a fair value gap and let's say you enter in the top quadrant and you want it to respect the top half. Ideally, if it doesn't go below, that's great. But this is why you put your stop loss below the candle that made the fair value gap. And then you target your 3-to-1. And that is a trade that lasts about 3 months, used starting from the daily to enter, using that monthly as a reference point to make sure that price is telling you that it's still inside. Okay. So that's an example of what I'm looking for here on Bitcoin. We're still in a premium. We're still at 110,000. I mean, that's crazy. There's people that bought spot up here and they got $125,000 Bitcoin because they're using centralized exchanges. So this is why you have to have very specific conditions and rules for yourself based off of your funds, your psychology, and your preference, your attention span. What if, like, I don't want to buy here and then sit in the drawdown for 3 months before getting back to entry and then having to sit and draw down while it goes sideways for 2 months in the summer, right? This is predictable. This is normal for summer, right? This is normal for July and August. And then September is normal for it to go and make lower prices. It can go and respect this daily, or it can even go down here and tag this monthly liquidity down at 98 and then continue. But your rules are all going to depend on your preference and how you want to play the markets. Now, that's not to say that you can't hop in here and find trades intraday and be a sniper day trader, in and out regardless without a bias. Um, that's still absolutely possible. So let's highlight some examples of that just using the 15-minute chart. So I'm going to highlight a 15-minute fair value gap right here. So look what happened here. We're in this range. We're making lower lows. We're going up here. We're retracing, but we're not breaking these highs. So a time-based entry, even though this is really dirty and really, once again, this is the last week of August, so you would be better sitting out. Let me make sure I've got this highlighted right. Yeah, right there. Okay. So New York opens right here at 9:30, and we shift structure. By shift structure, meaning we broke this low, right? There's bull flag stop losses right here. You can see the cup, you can see the handle, you can see the tiny bull flag. But also, what else can you see? You can see that this bull flag, if I'm taking the length of this pole and putting it where it broke out, that paid. So that already paid. If people who longed this, obviously high risk, their stop would be right here. if they didn't take profits and exit their positions before the market opened, and they're still on the table, bang, they get wrecked. This first hour, the whole 10 o'clock hour, is kind of gross. And then we go down here and we dig up into this. This is a 15-minute, right? So we go down into here, and here's the lunch hour. We open up, dig back into the range. This is super gross again, but that's the top entry. After it trashes everyone trying along this, finally breaks structure and bleeds out into the next day. And then we go down here before open. Now look at this. That's a Friday at 8:30 a.m. Is that a random wick? Or could you foresee that? 8:30 a.m. Red folder. Last week of the month. That's not random. That's a liquidity injection. And they're using the news as an excuse for the price action. What are they doing? They're taking people's stop losses before going lower. So if you have specific rules, like, okay, I know that on this last week of the month, I'm looking at last week now, the last week of August, we've got a high impact red folder news driver at 8:30 a.m. New York time. I'm not going to trade, or at least I'm going to wait until 9:30 because I'm expecting people to get stopped out at 8:30. It's going to take people's money on that red folder. And then what happened? One, two, here's 9:15. So this 9:15 closes at 9:29. So 9:30 this opens up and it goes and it retests this. So we had 1, 2 candles that closed below this up close candle. We touch that order block and then absolutely dump. And then by 10 a.m. you're out of your trade. So that could be the trade, navigating around high impact news on the 15-minute chart intraday, and you're in it for 30 minutes. One 15-minute candle, two 15-minute candles, and you're done, and you're just aiming for the lows or the lower half of whatever this gap is. It's the daily gap. But there's an example of how you would use these high impact news drivers to navigate yourself around low probability conditions. So they're all through here. Thursday, we've got unemployment claims at 8:30, and then another one impact at 10 a.m. Friday, we've got 8:30. So if I trade this week, I will be trading at 9:30 a.m. or 10 a.m. on Friday, and I'm sitting out all of this all week because this was a holiday. This one we had 10 a.m. So let's see if we can find that news driver today. 6. I mean, look, this is really a nothing burger, right? You're gonna get people. Yeah, here's 10. It's making a bull flag. It's looking like it wants to go up into. We've got equal highs up here, and then this is the daily fair value gap. So, like I said, it's low probability. We've got downward market structure. It could come up here and use this to take liquidity and drive lower, or it could stop here and retrace later today, and then keep going lower. But you can kind of see that really you've got to not just study price action and patterns and RSI and divergences and your moving averages. You have to know when you're gonna put your money in the markets, right? And you guys talking about Oh, he's saying other volume. I was about to, let me see if I can turn this up. Sorry guys, we're like an hour in. I just checked your chat. um, can I? My bad. We have to blast your speakers later. But this all comes down to your trading plan, and if you're someone who's highly emotional and sensitive, there's still ways to trade, but you will lose if you don't have impulse control. And if you can't sit, like 90% of the population cannot sit in the middle of their room, close their eyes, and do nothing. That's it. That's all it takes to get ahead is recognize when you should not be pressing buttons and then develop a lifestyle. That's where the art comes into your process behind what you're doing behind the screens. Is what do you do? What do you have built into your schedule, into your routines, into your studies, into your journaling habits that makes it so that you are emotionally resilient enough not to fall victim to cheap dopamine in a world that is TikTok mentality, right? They want you to have a 90-second attention span and be conditioned to just click one more time to get that rush. Oh, what if this time? What if this time? Oh, dang. Well, now I'm mad that I lost this trade, so I'm just going to try one more time. No, bad. So, yeah, throw any questions you got in the chat if you guys want. Is it much better now? Awesome. But, yeah, if I see your Armenian friend, what's up, dude? And Tamil Chad, you guys are OGs. You guys are going to make it. You show up every day. And remember, showing up every day doesn't mean pushing buttons every day. In a career where you can have one day that pays for your month, that means use this week to practice not even looking at the charts until Friday. Like, just don't even look at it. It doesn't matter. Okay? Because you can go and backtest and do all this stuff this week, but and it's going to be helpful for you to backtest low probability weeks to see what garbage looks like. But wait and practice teaching your subconscious mind to be like, okay, I'm this is when, like, in my mind, I'm already a millionaire and I'm already doing this. So I'm going to be in nature. I'm going to hike. I'm going to do arts. I'm going to do this other side gig or build this business that I want to do that trading will eventually help me fund, right? Or I'm going to research this. Whatever it is, use the opportunity for when it's boring to condition your mind because the subconscious can't tell in between sub demo funds, demo wins, and demo losses. I mean, when you switch from demo to live funds, you will feel the difference. But use your subconscious mind as practice to program what you expect to see. And it's all about how you study and how you go about this. And maybe you're a swing trader and you prefer to press the button once per month and then wait and you sit on your hands or you want to build a strategy where you're going to go into the prop firms that allow you to hold overnight and hold through the news. And your preferred strategy is looking for this market structure shift with lows to be broken. You retrace into a daily point of interest. You stop on a dime at this daily order block, and then you enter in this quadrant on the daily, and then you just hold for 2 weeks or hold for specific lows. Right? Look at this. Here's where Jerome Powell came in and told everyone we're bullish. and then made it super pretty bull flag. And maybe you're like, huh, wait, we literally stopped on a dime right there at this daily order block. And then we petered out, and here's 4 p.m. You should be done trading by 4 p.m. even though the market doesn't close yet. So what happens here? You could take this 15-minute fair value gap, enter here, really small risk. I mean, that's really small. Enter this midpoint, put a stop above where you think it should be, and then just aim for the lows. 10R. And maybe that's your strategy, maybe that's your psychology, where you use one of these funds that let you hold overnight, like Funded Trading Plus. And you enter with 2 micros, or say if that was NASDAQ or something, 2 micros, 10, you put $100 risk and you make $1,000 in what? There's the 25th to, wait, yeah, with a 3-day trade. So if you can do that and you don't worry about any of this stuff, and you're like, oh, I'm just going to hold this for a 15-minute entry with targets on the daily time frame. That could be your model or your way to interact with markets. But it's all up to the individual. All about the macro time frame trading. August was really boring. You started with live funds, got wrecked. Scalping is not a bad idea either. Yeah, and that's it. Trading can be free. Your your trading education can be free, but the reality is it's never free for anybody because everyone, like I said, comes into this environment because there's no rules and you want to be a cowboy and press the button whenever you want. And then, maybe 1 in 7 times you hit that big win and then you go and you want to chase that dopamine. But the reality is you have to make rules in an environment where there aren't any. And you have to abide by time first because these markets run based off of time. I mean, it says right here, there's time and price. Like here's price and here's time, and that's it. Those are the two axes of the chart. So you have to master both of these. And what is price, if anything, other than the way that the market maker toys with the ebb and flow of your emotions? Everything's tied to money, and they fluctuate the price to give you an emotional response to the price. So if you want to master price, master your emotions, and if you want to master time, master patience and doing nothing when nothing is probable. And that's what these charts are, is for you to be successful, you have to see it from a higher perspective, right? Time or emotions, price are three. That's the third dimension. You with 110 grand, you can go buy a sports car. That's a 3D object. That's the 3D world, the third dimension. The fourth dimension is time. This is time dilation, time distortion. They're dragging everyone over here, gathering bets, and gamblers are like, oh my god, it hasn't pumped already. I'm just going to add more here. I'm going to add more here. Wrecked goes their direction. Then it's FOMO. Then they're using price to bait people into the long, people into the breakout, who are like, oh, well, I watched this YouTube video, so that means we just made new highs, and now this should be used as support, and I'm going to long here, and I'm going to have my stop loss way down here, so I'm going to have like a negative risk reward, right? It's less than 1, and then they get wrecked. So you got to see this from a higher perspective. And the fifth dimension is the dimension of unconditional love, or unconditional. It means it doesn't matter what the charts do. You will still be profitable regardless because you've mastered the two lower dimensions. So, with that higher perspective and that higher analysis, um, that's how we're going to look at these. Because look at this. This is time dilation, time distortion. They're they're propagating the narrative from November, right? The second week in November, all the way out here into February. It's like, oh wow, that's three full months, 3.5 months, right? Even out here into almost April or almost March. They're holding prices up here to get all these people to keep buying and keep buying, and then they wreck all of them. And then it's low after low after low, and you can see the pain of people getting stopped out because all these people are now they're getting their money taken off the table either by emotions, hard and fast, holy crap, we were wrong, wrecked, and then impulse up, FOMO. What is this impulse up on the daily, right? Retrace. And that's your market structure shift. It's really sharp and it comes up really fast. You enter on this daily, target that low, bang, and you get there in like a week. And then look at this, it makes this big giant bear flag, stops it out, and then reverse and never comes back. Either way, I'm not pressing the button up here. Look at Ethereum. What happened? We respected this midpoint on the weekly, wrecked the shorts, hit them one more time. Like, oh, all-time highs. Oh, all-time highs twice in 2 days. Holy cow. And now it's bleeding out. Bleeding out. We inverted this on the daily. Not only did we invert this, we made a gap on the way down. Now we're bleeding out and like gathering liquidity. Everyone can see this is a cup and handle. And hey, maybe it'll hold. You put your stop right there and you expect that there's a high likelihood that you could get stopped out. But it's also allowed if we take this low and bounce off this weekly order block and continue higher. That's also allowed. But the best place to enter was when it was slow and boring. So that's where you want to go through all these charts. You're like, okay, is this slow and boring? Or is BNB at all-time highs? And the best time to get in BNB was when it was boring in 2023, right? When's the best time to get in these? When it's slow and boring and everyone says it's dead and it's going nowhere and we should have pumped by now and man, our technology is better than what the price is saying and oh my goodness, like that's why you're in projects before they pump because you see the technology is better. The price has yet to reflect the technological capabilities of said project. And then you front run the idea of the masses finding out later. If you are an emotional being, you can use your emotional perspective and your emotional intelligence, which is usually cyclical every 2 weeks. Say you find something super exciting being built on this project and you go through the emotional wave that transpires over 2 weeks and you're like, holy cow, this is exciting, or oh wow, but it's not being built out and it's just like there's not as much progress that I'd like, but holy cow, this could change everything. Use that emotional perspective and forecast that in 8 months. Are people would they still convince themselves to buy the project at 10x higher based off what you just experienced in the past 2 weeks or 2 months from your aha moment, your revelation moment. Because people still haven't discovered this, and more people will discover it at higher prices. So you can also use that if you are inherently an emotional being, which is 50% of the population. That's another discussion. But you can use that to forecast this and swing trade. So if you are learning to be a trader, you can study Bitcoin. You can study the NASDAQ for intraday trading. You can study Bitcoin for weekly or monthly setups. And then you can also study and get some, uh, get your feet, get your hands dirty and practice yearly setups. Right, so you can practice all elements of trading and get a little bit of experience while when it's boring and going sideways, you can still work on your habits, work on your routines, work on your studies, increase your knowledge, increase your paper trading so that you can level up while you're doing the 90% of what it takes to make it in trading, which is nothing. The art of being patient, the best way to be patient is to not spend your time waiting. So if we're doing nothing but going sideways in this example, in this specific altcoin, which just it looks like most other altcoins, it's in a cup and handle at the low and it has been for a long time. This is the perfect time to study. It's the perfect time to paper trade. It is the perfect time to build a plan and project what you want to do with your theoretical funds at a theoretical price point in a year, in 6 months, in May next year, right? And then you can practice your real world routines and meditation practice and your gym routine, and you can show up every day without expecting to uh, get massive biceps in the first week or the first month or the first 3 months. But you know that showing up consistently every day without paying any attention to the short-term results will get you so far that people will be like, holy cow, it looks like overnight success. But you knew it happened over 1,000 nights. And that's the unseen work. Like with the 80-20 rule, 80% of the work goes unseen. And also 20% of your actions yield 80% of results. So if you're working and you're working and you're working down here and no one sees it happening and then bang, there's the 20%. And all you gotta do is click sell right there. Just take a portion of position off after we take highs, right? And that will yield, theoretically, let's say you were building in here, you were DCAing, you were studying, you were working out, you were doing your side hustle, and then bang, we get this impulse up, you take 80% off the table. You still got a bag, you still got a moon bag in case it goes up to $1, but you're also paid for the 80% of the work that you put in down here. The worst is when you see it up here and you're like, oh, it's going to $1 and you do nothing. And then it all goes back to where it's been. You're like, oh man, now you've got no reward for your effort. So put the effort in without expectation to the outcome. And then when the outcome is sharp and positive in your direction, don't hesitate to pay yourself for the work you've put in. You still leave some on the table, but be prepared for all three scenarios, which is Bitcoin can go sideways, it can go down, or it can go up from here. Have a plan for all three. So you guys can kind of see where we're headed. We're holding this parabola in altcoins. Ethereum just made all-time highs. Bitcoin's going sideways. Everyone ever who bought Bitcoin's in profits. Um, what do you say here? Are we at the end of the 4-year cycle? Take profits in alts and put it what? Take profits in alts and put it into BTC? What kind of question is that? Right now, people are taking profits in Bitcoin and putting them into alts. The number one alt being Ethereum, but also these higher ticket alts like BNB. So you buy low, sell high. So that's at the lows. Bitcoin's at the highs. You tell me where the money flow should go. But yeah, any other questions for the chat? Let me know. Otherwise, that is the gist of it. And this is the type of industry where you might you're likely to work unpaid for 2 years or 4 years, and then if you're willing to do that and stomach that, then you will be unemployable, and you will not need a label or anyone to help you because you put in the work, you put in the late nights. You're not out here watching other people's streams taking their trades because you know what you're looking for, you know what time you're looking for it, and how long it should take. And then, well, then you're off to the races. Then it's 1v1. It's like it's like running. If you're anyone's a runner, it's you can run a marathon and you can have a little number on your chest and there's 100 other people, but that race is 1v1. It's you versus you every single time. It doesn't matter how many people are have the same idea or going in the same direction or the opposite direction. It's always you v you. And you can I mean, I've had times when uh I've like let's find it. Let's go to the 15-minute chart and find an example. But like Master Friend, my mentor, I've had times where I've done something like this and taken a trade here and shorted it, and then he's done the exact opposite and he had a completely different thing he was looking for, and he took a long and then took it to the highs, and we had two separate things we were looking for that ended up still being profitable in two different directions. Then, of course, it's really fun when you you were looking for something specific and then you post it and then your mentor is taking the same trade. That's also pretty fun. And that's happened a lot. But it doesn't come from watching someone else's stream ready to push the button on your account because you're waiting for their decisions to influence your financial decisions. That's not what we're here for. You're here to be completely and utterly independent in all ways. And that's why obviously none of this is financial advice because I don't know your psyche. I don't know your trading preferences. I don't know if you even, maybe you don't even have the like updated data on TradingView. So you can't take a trade on the 15-second chart, right? Or maybe you want a swing trade, but that's all up to you. And that's where you've got to journal your emotions and your technicals before a trade, during the trade, and after the trade, and then review your psyche and how the market mirrors your results back to you. So, in ninjutsu, well, we can close off with this. My instructor said, perfect practice does not make perfect. Or practice does not make perfect. Perfect practice makes perfect. So with that, guys, I'm gonna sign out and yeah, keep practicing, keep studying, recognize when you're not supposed to push the button. All the information's free on YouTube. Um, if you have a million uh, questions or you want to actually formulate a model based off of your psychology or you want to go into the realm of emotional mastery, um, send me a DM. I'm opening up my Discord this month. Uh, and obviously, all the technicals, all the reading price, all the times of day, all of that is free. But if you want my personal insight and um, perspective, let me know. And I'd be happy to work with you. Thank you, everyone, for tuning in. Thanks, Armenian friend. And we will see you next week. I'll be going live in my Discord for funded trading. And when crypto pops off, I'm going to be doing some $100 to 100K challenges and see if we can rip it up when the money starts flowing and it gets easy to trade these altcoins. We're going to do some fun stuff. Because fun fact, if you take $100 and you double it, you just double it 10 times in a row, aim for 100% gains, and take all the money off the table. You do that 10 times, you can turn $100 into 100K. So we'll be doing fun stuff like that for the bull run. But for now, we're practicing patience and habits and mentality. So thanks, guys, and I look forward